Hi, I'm Ray Hutchins, founder of Data One Qubit, and I'm doing another video here talking about various objections and criticisms I have gotten related to the deal that I want to address here in this format to help someone who's looking at the deal and looking at me. One of the comments I've gotten is that the deal, the way it's organized in the pro forma and the financials, doesn't generate large enough returns to generate the size, commensurate with the size of the investment. Now, true enough, this is an $11 million startup raise based on a $36 million valuation with no revenues. That's a big VC deal or big startup deal under any circumstances. No question about that. But a couple of things. First of all, there are smaller deals and there are larger deals. There's deals that solve small business problems. There are deals that solve large business problems. This is a startup deal that solves a large business problem, and it has the kind of returns associated with it that make that risk worthwhile. The returns that you'll see in this deal, you'll see that the way the numbers are organized right now after 3.5 years, the company's doing $45–50 million and it's got $20 million worth of profit on it. So in the 45% gross profit margin range. Now, when I first did the pro forma, it was a higher profit range on this thing. It had higher numbers. But I was told that any VC that would look at the deal, if it had higher than 45% gross profit on it, it would not be believable at that point. Well, okay, so I went ahead and dialed back the numbers on it. But look at the numbers, if you would, please. Look at that pro forma. You'll see that the revenues come, this is a data company. So, data doesn't cost anything after you get it up and you're generating the data. But look at the data. You see about half the money is coming from data sales through the Vendor Assessment as a Service, the VAS application, and some of the other subscription products, all these subscription products that we're generating. And about half of the sales are coming from sales to the insurance industry, is what I'm putting in other data streams that we have in there. So let's talk about those two for just a second. Because those numbers, frankly, are, in my opinion, and if you look at it and think about it a little bit, ludicrously low. The whole VAS side of things, the subscription side of things, is predicated, as you'll notice the numbers in 2017, 2018, on a total of 92,000, 91,000, 92,000 seats, subscription seats, out of a market starting with the 23 million businesses in the Dun & Bradstreet database, and then multiple other markets that are described in the pitch deck and other places. So 25 million potential companies and whatnot out there that could be in the market. We've got we're selling 91,000 seats at prices ranging from $69 a week to $149 a month to $749 a year. Very, very low prices. And in our validations that we have done, the main criticism that I've gotten is I'm not charging enough. I'm not charging enough for the VAS products. That I can easily double that. Okay, well, double it. Double it in the pro forma, double those numbers, and your numbers jump from $20 million to $40 million on that one category. So, and there's a lot more detail in there where you can look at the numbers and see where you could have a lot more subscriptions than 92,000, of course, and we would have it as well. Look at the marketing plan and how that works. So, and then we can charge a lot more for it. Look at what we're charging for the investor newsletter and think about just that one category. How much more money could be generated off of that? So there's that. Now let's talk about the data streams to industry. Currently talking to the cyber insurance industry about selling them data streams that will help them write cyber insurance policies. Now, when I first start talking to these guys, they don't know what I'm talking about. The idea of collecting cyber security company and product information, all of it, putting it all together, and then organizing that information so that they can use it to manage risk for cyber insurance policies. But after we talk about it for just a little bit, they get it. They understand that they need this data, that they need to know what products companies are using to get an idea about how safe those networks are. Because all products are not all apples and apples. I mean, some products are better than others. And is someone using a mix of older products and newer products? Whatever. All that mix that has to go in there. If you're going to protect a network, you're going to use somewhere between 5 and 40 different products to protect the network. Which products those are matter, and they'll matter to insurance companies. So once I get through and I explain this to them and they start to get it, they go, yeah, definitely we need this data. So, but how much are they going to pay for it? Well, I've got it in the pro forma right now that we're charging between $250,000 and $500,000 a year to whichever company it is. And there's various details associated with different levels of companies and whatnot. But what I'm here to say is that no one else is producing this information. They must have it. They agree to that. They must have the information. They must have the data, or they cannot do proper risk management. And we can charge a lot more than the numbers that I have in there. I mean, for the top tier insurance companies, there's about 20 of them out there. $1 million a year is no problem. They're paying all their executives more than that a year. To pay that much for, you know, the data that they need for it to roll out a new cyber insurance product line is no big deal to these guys, in my opinion. You can make your own judgment. So back to the original critique that this deal was not showing revenues that were commensurate with a big deal and the kind of returns for this kind of money. I'm saying the money is right there. And one more thing, let's not forget. This Data1 Qubit is a platform company. A VC who goes into business with me and with us on this platform, you have at your fingertips a military intelligence gathering machine that is focused on the cybersecurity industry. It is your intelligence gathering machine. You will be in the catbird seat. You can see everything going on of all the cybersecurity companies globally, all their products globally, information being collected around the clock. And so if you, as a venture capitalist or some other investor of some kind or another, want to move into this industry, you have the data to do it. Nowhere is that reflected in the valuation of the company. Nowhere is that reflected in any of the revenues of the company. There's another component. This platform, this information collecting platform that we have here, it is focused on the cybersecurity industry first. After we collect the data on cybersecurity, we move into other industries, and we take the cybersecurity data and the cybersecurity company and product data, we take that with us into genomics, into drones, electronic manufacturing services, cloud services, whatever. We take that and then we attack those industries as well. Nowhere is that reflected in any of the numbers or any of the valuation. Nowhere. So, my counter is, please look at this information, think about this, and then think about, is it worth it? Is this $11 million and this $36 million valuation worth it for what we're talking about here? Thank you.